Hello and welcome to Wyckoff Training Academy. I hope my screen is visible. And this session, don't worry about that thing. So in this session, I'm going to discuss about freight setup do we had on XAUUSD and EURUSD. And as you can see, this is a live market and bottom formation is taking place. Bottom at this particular point. Let me draw it. Bottom. Here we have a bottom formation. So now let us see where the price goes from this particular point. Either we are going to see 1 second, let me bring up my tool. We're going to see this kind of price behavior, or other we're going to see this kind of price behavior. For unlike either ways, we would be looking for a buy order above this level and sell order below this level. So having said that, this particular session is it is related to version 185, wherein we would be discussing more into how to plan the trades, trend or counter trend, uh, so that everyone who has bought this system uh, should be in a position to trade. So I will be talking more about version 185. So before we begin with version 185, let me mark the trades which we got. Actually, I shared this chart and I asked some of my students to give me the input, but I haven't received the input. Okay, no problem. Um, but I will keep on sharing the trade setups and keep on sharing the trades which I find in my trading. So I'll mark the trades accordingly. This is the trade setup which we got on 20 like 26. This is the trading decision candle, and here was my entry, and this was my stop loss. Let me change the color so that it should be visible to everyone. Because we are having. Should I keep it below blue also? Because blue would be. I think we should be going. We should keep magenta or pink color. So this was my buy and this was my stop loss SL. Now for targets, I already mentioned everyone like as in the previous one, our respective highs would be our targets, and like and if the price breaks this level, or either you can trail the stop loss. We have a trailing stop loss, like trailing stop loss. Whenever we see a trade. So now what kind of trade this is? This is a counter trend trade. If you go with the version, this buy trade is based on version 155. I I said it earlier also that every indicator of mine is a trading system in itself. So if you plan for a trade and if you plan for a look for a trading opportunity based on this support and resistance which are drawn automatically on the chart, you can plan the trade. This is a level, a support was formed, we got a pullback. This is our entry, and this is how far the market has went in this particular direction. So if I consider my stop loss to be like this, if this was my break even point and Mar- market has broken this level, this my break even point at this particular point. But I had like had did I got the opportunity to exit the trade? Yes, because once the trade has initiated in my favor, I rather I'll go for a trailing stop loss. Sorry, my voice is not. Sorry for noise. And I'll trail my stop loss, or either I'll book my profit, depending upon whatever the levels I have previously planned. So this is my first target. This would be my second target, and so on. So once my first target is broken, I'll bring my stop loss to this one, and I'll start trailing based on that. So in that case, this is this is how I normally like to trade. Now, this was the first trading opportunity. And after that, had we like, did we got any trading opportunity after that? Here we got a selling opportunity. Now we haven't got any bottom yet. This is This trade, this is as a resistance. We had a breakdown, like we have a continuation to the downward side, then we got selling opportunity here. This was second trading opportunity. Now here, if we have placed a stop loss over here and initiated a sell trade on this particular candle, let me mark it so that everyone should be able to see it clearly. And this is the second. So now, if I have kept my stop loss over here and initiated my sell trade over here, so I'm stopped out in this particular candle. So I don't mind paying stop losses because it is a stop loss is something which we have to abide by. And so sometimes we are stopped out, no problem, no issues, because we are planning and our trades based on certain fixed rules which are related to stop loss. So this is wherein I was stopped out. This is my second trading opportunity. Now, if I consider this to be a pullback, then this is more towards kind of a distribution taking place. So I'll not get into distribution because there is another course dedicated to that one, which I'm going to start from today. So this is some degree of distribution taking place at this particular point. So and why it is so? Why this is a distribution? It has its own logic and own logic and own interpretation. So having said that, if I'm stopped out, normally I prefer to take one single trade. But if at all, if I get this kind of situation, then I would love to take a trade because this shows me the rejection of price towards the upper side and it is giving me a top as well. And like for like I'm not getting a top at this, but like related to 188 version, but I'm getting a top at this particular point. So I have much to gain but little to lose because my stop was minuscule if you compare it to this one. Uh, One second, let me put the tool so that you should be able to understand. If this was my stop, this was my so my stop was of 1 second, 129 points. That is 12 pips or 13 pips, give or take, in my first trade. In my second trade, my stop would have been much more bigger, uh, almost 30 pips, give or take. And all in all, my 30 and 13. So if I see, like, if I consider exiting at the bottom, because bottoms and tops are normally taken as an exit sign. So if I consider this to be, so my profit is like 76 pip. So it is give or take when I was stopped out by 13 pips approximate. So my risk to reward is more than what you can say, like 76 pips, and like it is 766 and 13 pips. So you can do the math. So what is the risk to reward I got in this particular trading situation? So having said that, these are the trades which I version to understand the market. It's a greater power to pull the market towards itself, either supply or demand. So that is what I normally I tend to look into whenever there is a market formation taking place, or like whenever there is a trade formation taking place. So apart from this one, do we have another trade? Yes, we have another trade. We got a trade at this particular point. This is based on 155 version. So here we have a trend and a counter trend move. This is exhausted. Now I want to see no supply kind of thing, wherein I can see there is a red candle, but it shouldn't be denoting any supply. So I would initiate a buy trade at this particular point. So that is I'm going to discuss in version 155, 185 as we dive into it. And apart from that, I have seen some other trade as well on this particular. Okay, so here we had a top formation. Now we have after top formation. Now many would say whether should we consider this as a trade because there are confluence. Top formation was underway when I posted this chart, and we got another resistance at this particular point. So there are 2 points wherein like this would be basically this would be the top, and we got a resistance. So there is a confluence, or you can say multiple. Like uh, two indicators are indicating us that there is a top formation and a resistance formation has taken place. So we had a swing down. Like this is not, I'll not consider this to be a swing because this is just mere continuation. So this is not a trade to be considered in this particular way because we want clear indication of swing formation so that we can initiate a trade. Like here, we have a swing formation, then we would consider it to be a tradable opportunity. So this is not the trade. And moreover, here we got a like you can say a support and a bottom. Then we have a breakout, like we have a some bouncing price bounced upwards from this particular support. Then it came back and then it came back into this range. So this kind of price behavior is normally seen in when it comes to support or resistance. This normally people like what I would label them to be is like this is something wherein they are smart or composite operator is trying to look for fresh supply or people are checking whether the supply is there in the market to take this market up downwards, or either they are in lookout for new fresh buyers so that they can like new sellers so that they can buy back, or they can do the accumulation stuff, or they can do the accumulation of particular like when XAUUSD, and they can accumulate the quantity and so that they can move the market upwards. So this is something wherein accumulation was going on, and after accumulation, this is the result which we normally see. So if you want, you can initiate a trade, but normally I recommend students to please make yourself well acquainted with this market mechanism, so that before initiating, if you are not confident that this is an accumulation or this is what, to some degree, this is uh, a perfect pullback kind of situation like this. So don't get into a trade. So this would be my advice, and try to find crisp and clear trade setups till the time you get well versed with these tools, well versed with version 155, because it is a very, very excellent tape reading method available for Wyckoff traders, so that you should be able to identify whether demand is in control or supply is in control, so that you can assess and plan your trade accordingly. So this is how these were the trade setups which I normally highlighted in this thing, and I'll once again let me check if I missed something. Though we got multiple trade setups over here, multiple things. Like for example, if you dive into this one, if you dive here, if you look into this one, we have a price going sideways, then a pullback, then we are going downward, then a pullback, then. So if you are trading for like one or one trade is more than enough for like for assessing whether the market is going to go in particular direction or not. If that is not the case, then there is no sense in taking multiple trades, because though there are certain people who would look for multiple trading opportunities because they understand this particular top formation has been held and prices every time price is approaching it and approaching this particular level, price is going downwards. So there are certain students who might take multiple trades, but I'm not of that notion that we should go into multiple trades. One or two, if we get a clear cut, a clear what you can say, a clear indication that this is a swing, and if this is a swing, we would initiate trade here. This would be a stop. If we are not, like, this would be our target, we have already achieved the target. Whatever give or take, like 10, even if I get 10 pips, even if I get 5 pips, even if I get 10 pips, I don't bother taking it, because I look for my exits based on clear higher supports and higher lower resistance, higher resistance and lower supports. If they are achieved, at least I can bring my stop loss to break even and relieve certain quantity of my trades. So that is how I normally tend to trade. And this is what we got two careful trades. And this trade is still, I think, though once I'm out of the trade, I don't, I'm in a trade, do it, does it. So having said that, now in X Euro USD, I got opportunity at this particular point on version 155. based on version 155. So the reason for giving you all the things is like you can see there are multiple opportunities which you would be getting. We have some degree of accumulation taking place over here. Then we have price going upwards and price is coming back and it is testing this particular level. So now, if you, I normally tend to consider price touching this particular point, particular line, support or resistance, or top or bottom either ways, and should bounce back from this particular point. So if you want, you can consider this one as your trading opportunity, or if not, then like for example, if I see what is the level 04055, it just missed by like 0.0005 uh, points. So if you want, you can consider it. If not, then if you can see this list, prices some to some degree tested it. So if you want, you can consider it. If you don't want, then you can leave it aside. Now, this was the trade setup, one trade setup which I marked. This is because this was a top formation which has taken place over here. Price went down, touched this level, and then this was a trade candle which you would initiate a sell trade. Now, remember, this is Euro USD. So for gold, the stop loss. So if I'm initiating a trade over here on this particular candle, so my stop eventually be above this particular level. And now, where would I exit the trade? Either I mark the following, you can say, uh, following lows, which are opposite to the supply trade, selling or trade, and either if I get a bottom formation, if I get like here it was a clear sign that we should exit at this particular point because we don't know whether price would bounce back from this particular level or it will break this level and it will come back and test, and then a new down move will start. So this was a very beautiful trade. Like one of my student has initiated a trade. Don't come. I've seen many people. They just come. I mean, they look for opportunity, or they look for a huge quantity to be achieved. That is not the case with this one. You have to be very, very, what do you say, active in trading, and you have to take whatever market is offering you or giving you. You would get ample of opportunity. That is the reason why I say this. Like the setup which I have explained is always consistent in nature because you get multiple opportunities. Once you get multiple opportunities, then why to as we are clear with our exits, we are clear with our exits. We know where to enter, on which candle. This is a supply candle. We have to enter on our supply candle. Once the bottom is formed, we should be out of the trade. Simple as that. So there is no sense in hanging around with this one. Now, here we got an opportunity as well. But this is not an opportunity because many people, this is not a swing. If you look at this particular point, and if you look at this particular point, this is just price revolving around this level. But here we got an opportunity. Though it was a top formation above, this was a previous top and a support formation. Price has broken out, came back. If you want, you can initiate a trade at this particular point. But you're not stopped out. It gives you, here it has given you two opportunities, 1 year and 1 year. Let me mark it so that you should be able to understand. This is the candle for initiating buy. This is the candle for initiating a buy. Let me bring it here. So this is the perfect trade. Your stop is here. I don't know what is the pip calculation for this one because I don't trade Euro USD, so I haven't seen it. But you can do the math. I can tell you the risk for about 1:1.82, and give or take how many points do you have? Like I think it is 6 pips, or 6 or 7 pips. So this is how you can trade. And uh, after this, I got another trading opportunity, I guess. So now many people are asking and many people are telling me, sir, we are getting only this point. We are getting killed by the spread. So what I'm telling you, what I'm showing you is on 5 minutes. Okay. So you can do you can trade based on 15 minutes. Normally in Forex, everybody knows that there is a spread which is killing everyone. So like 15 or like in XAUUSD, we normally the spread is of 30 points and give or take. Or spread differences of 30 points, give or take. And for like in other instruments, like it is 10, 8, or 15, depending upon the instrument or depending upon the currency pair. So if you are having any problem with this thing, what you can say, a spread, then you can switch to higher time frame. I've seen people trading on 1 minute. Then how you're planning your trades on? Like how are you planning to deal with the spread? Plan a trading time, choose a trading time frame which will help you in trading and which consistency of I normally tend to trade. Now I'll get into version 185. One second. So now I'll hide this thing. I don't want this thing to be visible. So now version 185. Version 185 comes with what option do I use? There is a big trade option, big trade forex option, buy sell zone option. So when buy sell zone or big trade forex is applied, you get a yellow line which acts as a zone for you. Above this is the buy zone. I'll hide the drawing so that nobody get confused. No one gets confused with this one. So this is the buy zone, and what if price goes below this one? This would be a sell zone. So sell zone means we would only look for selling opportunity below this yellow level, and we would only be looking out for buying opportunities above this particular level. So this is one thing. It has only one single purpose to give us, and whenever the price is in between, we would not initiate any trade. We would only look for a sell opportunity below this, a buying opportunity above this. Now, how to initiate a buy opportunity? Once we have a pullback, we would initiate a buy opportunity. Once we have a pullback toward the downward side, we would consider it as a selling order opportunity. Having said that, now the purpose of 180 big for like buy sell zone is over. Now, what is big trade forex version 178? Big trade forex version 178 is something which gives us a big trading opportunity. Simple by the name, it is simple to understand. If price is going above, you can look for a first pullback, buy here with a stop, and exit. Either exit with the fixed determined, like whatever your like we have trailing stop loss along with this one, so you can exit based on trailing stop loss or based on your what you can say uh, fixed profit targets, like for example 1:2, 1:3, 1:4, 1:5, or whatever the market is giving you easily. Or either you can trail the stop loss based on this 155 version, 185 version. Sorry, my bad, 185 version. So there are multiple options. If you have like opposite highs when we are buying, then you can exit or trail the stop loss accordingly. So I've given liberty to the trader to so that they can identify it and they can use it based on their uh, money management skills and trade management skills. So having said that, once the price goes below, you wait for first pullback and you sell it on this red and this, buy above this green line and sell below this red line. Simple. So this gives us additional confidence. This is how big trade is to be used. Now we'll come back to another thing, which is one high volume pullback, Wyckoff price and volume pullback. Sorry. So this is a ribbon which we are getting here over here. A red ribbon means prices in downtrend, so prices are going to go downwards. If there is a green ribbon, that means prices are going to go upwards. So now here you can see this blue line, this blue particular line, this blue particular line. So actually, what happened? Many people have, many of my students, they are asking for like imbalance. They are running after FVGA and fair value gap and other kind of thing. So how we can get the uh, imbalance based on price and volume correlation? So I have coded this in such a way that we get only price and volume correlation. Nothing about it's not related to any fair value gap or any other theories or any other hidden secrets. It is simple based on price and volume. Whenever there is a price and volume imbalance, which can be tradable, we it plots it a blue line. So what you have to do is like how you have to trade. First, the price should be above this one. That means the price should above green level or green ribbon, you can say. Then we should get a imbalance. Once the imbalance is there, we would initiate a buy trade on the first pullback, only buy trade. Once, like for example, here the ribbon is red, there is an imbalance, but price, we haven't seen any pullback to this particular. If that would have been the case, then I would have shorted over here. Like for example, here. Now, here the after the imbalance, price went below the level, below the ribbon, and now it is red. So it is up to you to take the trade or call or not. But I would rather love to see this trade setup. When there is a blue line, first thing, it should be below the red ribbon. There should be a imbalance line. Then price should come back and test it and then go downwards. So now you would say, sir, why we are getting this many imbalance levels and all this stuff. This gives you, whenever there is an imbalance, you can see price is either turning its price is going through any turn or twist. Now you would say that we haven't seen any imbalance. So it doesn't mean if this is an imbalance, that means price would go here and there, above and below it, and then starts this upward movement. So now let us see how many trade setup do we find out, or we are able to see trend trading kind of a thing and a counter trend kind of a thing. So I'll not get into counter trend because for trend trading situation we got get. So my point is like if after quantity which like all of my it would not be the case that you are getting a less number of trades. The only thing is that you have to be very like you have to focus on whether I'm getting here. This is the perfect trading opportunity. When it appears and it gives you a hell lot of money. Like this is a your pullback ribbon is red. You get an imbalance below this level. This is your selling up your sell order. This is your stop loss above the ribbon, and this is the move which you got. So if you drop down to lower time frame or you do higher time frame, lower time frame analysis, many traders are going for like monitoring market on 15 minutes and looping down or dropping down to 1 minute or 3 minutes and finding trades on lower time frame. So that I don't do, but I'll not stop you from doing it. But you can use my indicators on in that way also. It would give you more profound and more trading opportunities. Like for example, if we mark from this particular level, like for example, this point, this was the because the thing is like I think we got a bottom around here. This is the bottom. So you can exit either ways. Either you can trade your stop loss based on the trailing stop loss which comes along with 185 version, or either you can exit out at your like for example based on your risk to reward. So it is 1:6, like 1:7. So I'm a different kind of trader. I don't trade. I'd rather I look for a trading opportunity wherein I get fixed profits, or either if that is not the case, then I wait for a good opportunity. I trade everything. So whatever falls into my lap, I trade it. So this is how, and this is how, and this is imbalance line. So it will give you a very like low stop loss, high rewarding trades. And you drop down to like if you come up to 15 minutes, irrespective of any time frame, it would give you opportunities, no problem. Now here, if the price has closed above this particular level, then this would have been a wonderful trade. But trading, buying over here, this would be a killer for you. Even if you have opted it for it, once you get a reversal, when you get a high volume pullback, you should be out of the trade. Simple. Now here also we haven't got any trading opportunity, but on 15 minutes we are getting this trading opportunity. But this is not tradable. Why? Because the ribbon is not green, it is yellow. So I'll give if you I'll consider it because yellow means it is going into a consolidation. So that would not be the best trading opportunity. Here, if you see, I cannot see it properly. One second. Here we came down and then we got up. We sold over here, considering to be supply. This is a stop loss or whatever this. I will not keep the stop loss here. Remember, make it like because when we are going sideways, we will not go look for this kind of supply, this kind of stop loss. It has to be here somewhere. Here on this above this particular candle, because if I'm wrong, I am wrong here. I'll not wait for market to prove me wrong till this particular point. Now, if I consider this line to be like this, then we are going up, down, and then here. So now here you can see it is in consolidation, but price is clearly above this level. If you want, you can initiate the trade over here. If not, then wait. Don't worry. Don't rush for the trades. Let the trades come back to you. So, for example, I would be waiting for this kind of opportunity wherein my risk is minimum and my reward is maximum. Like for example, this was imbalance. We have a touch. Then I would love to buy here. And if I see at this particular point, like for example, let me bring long opportunity. Either this one or this one. Anyone is fine. This is my stop loss. And how many points the market went in this particular direction. So these are all cherry pick trades. They are not the trades which you would like run get in frequency, but these are when you would get good profit. So you can come down to lower time frame also, and you can check go below 5 minutes. And I don't recommend my students to go below 5 minutes, because the thing is like when you go below 5 minutes, the thing especially in currency, especially in gold, I don't recommend going below 5 minutes. But on other currencies, I don't have any particular idea about that one. But you can see you would get the trading opportunity. It is above ribbon. We have a pullback. Then whatever the profit is, like either you can trail your stop loss, or either you can exit out with your fixed stop loss or fixed target, or 1:2, 1:3. Because that is the liberty I'm giving to every trader. You would see, I always say it is up to you to decide it is up to you to decide, because I'm not, because trading is very subjective and it is evolving, and you have to keep on changing and adapting to the changes of the market. So you should have multiple options of if, for example, for buying or selling, I have fixed rules, but for trailing the stop loss and for exiting, it has to be a floating rule. You cannot like it has to be. You should give the flexibility to the trader. Like for example, I got an opportunity over here. Here it is, so, but you have to look for a swing opportunity. This kind of price behavior is not swing. So I hope this video would explain you how to trade based on this particular tool, and always try to look for opportunities which are very clear. And in next video, which will be the continuation of this one, I would explain you how to trade based on counter trend based on this particular ribbon. Okay. So thanks a lot for watching the video.